Why do 99% of successful traders use the Bollinger Bands indicator? How did I manage to earn $1,000 using the Bollinger Bands indicator? How to correctly use the indicator is binary options trading. Welcome everyone to my YouTube channel. Here I tell and show you how to make money from trading. Subscribe to my YouTube channel and put your likes this video. There are many ways to understand price movement in financial markets: technical analysis, fundamental analysis, oscillators, and indicator. One such indicator is Bollinger Bands. Traders use it to assess volatility and potential entry or exit points of positions. In this video, you will learn how to set up and use this indicator, as well as how to make money on it. Let's go! As always, let's start with the theory. What are Bollinger Bands? This indicator helps determine when is the best time to enter and trade and when to exit. These bands are often used to define an upper limit for which prices can rise and a lower limit for when price can fall. It's important to remember that it's risky to rely only on bands for trading because they only take into account prices and volatility, ignoring other important factors. Let's figure out how to properly use this indicator in trading. So the first thing we will look at is 1. How the Bollinger Bands worked. Bollinger Bands consist of 3 lines. Middle band, typical a 20-day average of prices is used. 2. Upper band, 3. Lower bands. Bollinger Bands are commonly used to measure market volatility and help traders identify overbought or oversold assets. When price move outside of the upper or lower bands, it may indicate a possible change in price trend. How can traders use Bollinger Bands to get signals? Traders can use Bollinger Bands to receive various signals and make trading decisions. Here are a few ways traders can use Bollinger Bands. 1. Price crossing the bands. When the price crosses the upper band, it can indicate that the asset is overbought and signal a possible decline in prices. Conversely, when the price crosses the lower band, it may indicate that the asset is oversold and suggest a possible price increase. 2. Price deviation from the bands. If the price is outside the Bollinger Bands for a long time, this may indicate a strong trend in that direction. Traders can use this to identify strong trends. 3. Bands compression. When Bollinger Bands contract, it can indicate anticipation of future price movements. Traders can use this to prepare for possible sudden change in volatility and prices. 4. Use in conjunction with other indicators. Bollinger Bands can be effective when used in conjunction with other technical indicators, such as RSI or MACD indicator. It's important to remember that no indicator guarantees successful trading, and you should always do additional analysis and consider other factors before making trading decisions. How to analyze bands. John Bollinger himself noted contacts with bands are just contacts, not signals. Contact with the upper Bollinger Bands not in itself a cell signals. Contact with the lower Bollinger Bands not in itself a bisignal. Price can often travel in strikes. In the above chart we can see when the price is held between the upper Bollinger Bands. We can therefore define this channel as a buy zone. On the other hand, if the price is within the Bollinger Bands, this means a sell zone. Finally, if the price is between the bands, it's effectively neutral, and we can say that this is a charted territory, no man's land. Tool for traders and trends. Now that we have established the basic rules for Bollinger Bands, let's look at how the technical tool can be useful for traders. Imagine a chart where the price is moving up. Trend traders will enter long positions when price enters a Bollinger buy zone and will hold them as long as price remains above that zone. As for the exit point, each trader can decide differently, but one option may be to close the position if the candle on the chart turns red and more than 75% of its body is below the buy zone. The 75% rule helps you understand where the trend may end. But why do we need the candle to be red? This is done to avoid being thrown out of trends by a rapid downward price movement that then returns to this buy zone. It's important to note that traders can stay in the trend most of the time and only exit the trade when the price begins to stabilize at the top of a new range. Bollinger Bands can be useful tool for traders who want to capitalize on a weakening trend by helping to identify change in price direction. We can see from the chart where a trader using Bollinger Bands can quickly notice when a trend begins to weaken. After seeing prices move out of the normal trend range, a trader may decide to use Bollinger Bands to sell when price touches the upper band. Another way to use Bollinger Bands is as a squeeze strategy. A squeeze occurs when the price of an asset moves very aggressively and when suddenly begins to move sideways in a narrow range. A trader can easily see what is happening with the price of an asset because the upper and lower Bollinger Bands are moving closer to each other. They suggest that volatility is decreasing after such a period of squeeze. Price often makes a large move in one direction, especially it's accompanied by high trading volume. When the price breaks the upper or lower band, the trader buys or sells the asset. A stop-loss order is traditionally placed outside the squeeze range on the opposite side of the gap, protect against large losses. Now let's make some deals with you using the Bollinger Bands indicator. Okay, traders, let's start trading session. I will use Bollinger Bands indicator and RSI indicator. 1 second. Okay, let's start. Open currency pair for trading over 70%. Okay, I will trade with time 3 minutes. I will use high standard candles and time frame 1 minute. Okay. Let's start. I choose euro and the OTC currency pair. I make call option on 3 minutes. Traders, I have a profit, very good. Let's continue. I choose euro auto currency pair, make put option on 3 minutes. Traders, I have loose deal. Let's continue. And increase my trade amount to $100. I choose GBP CHF currency pair, make put option on 3 minutes. Very great, I have profit deal. So let's summarize. Bollinger Bands help traders determine the current market trend and assess its stretch. Upper and lower bands can indicate levels where I set my be overbought or oversold, which helps traders determine when to enter or exit traders. The width of the bands reflects the level of market volatility. Price crossovers with bands, price deviations from bands, and other signals generated by Bollinger Bands can help traders make decisions about entering and exiting traders. Bollinger Bands are a relatively simple tool that is easy to interpret and use even for what's new at trading. Don't forget to subscribe to my YouTube channel and put your like this video. See you in the new video.